Okay, let's start, and not because we have a tight schedule today. So I'm sure that more more attendees will join us. But welcome everybody to this first webinar of 2025, which is organized by the Swiss Healthcare Licensing Group and the Pharma Licensing Group UK. It's a true pleasure to see that today's topic has attracted a large group of experts in biopharma industry. I'm Francesca Lianza. I have more than 20 years experience in the healthcare industry in various roles, including business development licensing. But today I represent the Swiss Healthcare Licensing Group as a board member of the association, and joining me is Andrew. Hi, Andrew, who represented the Pharma Licensing UK Group and will moderate the Q&A session. So I would like to start with the agenda of today. There will be first a brief introduction of the Swiss healthcare licensing activities, followed by a short presentation of the Pharma Licensing Group and their activities. After that, we will have our two great speakers discussing relevant topics. You see that the topic of today is US and China, and how the environment is changing and how this could impact the deal making. The first presenter will be Michael Margolis, who is with us. Hi, Mike. And he will be speaking of the topic relating to the merger and acquisition in biopharma in the USA, followed by Howard. Hello, Howard. Welcome. Who will be speaking about China. At the end of the two presentations, we will have the Q&A session moderated by Andrew. We will ask you to include your question in the Teams chat, and then Andrew will select the questions, and that our two speakers will respond to those questions. So I hope everything is good, and thank you again for joining to our speakers and to all attendees. So if you can move to the next slide, please. Okay, so, and sorry, another one again, and if you can go to the next, Lambert. Thank you. So, two words about the Swiss Healthcare License Group. So it's a non-profit industry association, and it represents really a great group of deal-making professionals. The association aims really to create a family environment to connect, exchange knowledge, best practice, and build basically a relationship among the members in a very, very family manner. We wanted to really emphasize this because it's a great group to join. The association holds a lot of activities, and Lambert, if you can go to the next slide, we have also another member of our board together with us, Lambert, who is helping flipping the slides. Thank you, Lambert, for joining. So what are the benefits to join our association? We have every year a great conference with great speakers, inspiring really on update on deal making, environment, and trends. This year, the conference will be in Montreux, and you will see in the next slide a little bit of more insights regarding the agenda. Can you go back, please, Lambert? Thank you. Apart from that, we have, you see, our webinars and our local networking events really to connect our members. On top of it, we have the good partnering practice initiatives with videos and booklets, really to promote the common principles in terms of deal making and good partnering practices. We have in addition also the startup initiative, really a series of great workshops to help startups to be ready for partnering. And this is in collaboration with J&J and Base Launch, and it's the third year that we have these activities, this initiative, and was very well perceived. Every time we have at least 30, 35 startups joining us for this workshop event that is free of charge. And finally, there is really a privileged access to our private LinkedIn community and also the International Pharma Licensing Community platform, where you can find a lot of colleagues to exchange and to connect and network. So really an attractive kind of package for the members. So if you go to the next slide, Lambert, please. As I said, today we will have our flagship conference in Montreux from the 25th to the 27th of May. And the topic of today will be around the optimization of the portfolio strategy through creative deal making. So you can see we have really great speakers, top-notch speakers, with 2.5, so basically 2.5 days of great networking opportunity with peers. So we really encourage everybody to join our conference and to be members of the Swiss HLG. There is still space, but we have limited space, so we really encourage you again to join us to this amazing conference. Just let me say that the people attending, they come back and come back and come back. So that's the truth. So just to give you an idea that it's really a great event. So now I turn it over to Andrew, who will be introducing the Pharma Licensing Group UK. Thank you, Andrew.
Thank you, Francesca, and thank you to the Swiss HLG for doing the vast majority of the organisation of this event. It's terrific, so thank you. I mean, the PLG UK was the first licensing group to be formed back in 1984. So last year we celebrated our 40th anniversary. And I can't think how many deals and partnerships and companies were formed over that 40 years in the various networking events and educational events that PLG has undertaken. We represent the interest of BD&L executives of the UK community. We have about 333 members, both corporate and individual members. And we're very grateful to our support from our larger partners such as GlaxoSmithKline and AstraZeneca. Every year we try to do 6 or 7 events based primarily on networking, but also education. You can see some of the activities we're doing this year in 2025. We also get heavily involved with the IPLS, and I, as well as chair of the UK PLG, I'm also vice chairman of the IPLS, and I'm on the organising committee for the Berlin meeting in September. So next slide, please. So just to highlight a few of our events for 2025. We're very proud at PLG UK to have started the very first Introduction to Healthcare Business Development professional development course. And so far to date, over the last 30 years, we've equipped 1,661 individuals, business development individuals, with their very first exposure to best practice in business development and licensing. Our recent course attracted companies from all over the world, and we're very proud to do 2 of those every year. So that's our PLG ITC. We also run a meeting every quarter, and we're very grateful to our law partners there. The next meeting is called Deal Ready, which is next week, which is all about, this is part of a series equipping businesses with the skills to, or awareness of what you need to do when it comes to exiting a business. On the far right there, we're just starting off a new initiative called a Learned Lunch, and these are networking lunches for C-suite executives in the UK, followed by some pertinent professional development afterwards. And you can just see a Berlin slide there. If you just pop to the next slide, please. Our 19th IPLS is taking place in Berlin towards the end of September. There's still plenty of places still available. We're aiming for 250, 300 delegates to attend. And as Francesca said, people do keep returning to these type of events. We're very pleased to have a core group who always support this event, but often we're having many new delegates. And we think because we're in Berlin, this is going to be particularly well attended. So there's still an early bird discount to 1,400 euros, which represents a very good discount on the rack rate. And there are also opportunities within this conference if you wanted to arrange one-to-one meetings like you do with other partnering conferences, that's available. But also if there's a particular strategy or highlight you would like to talk to other members, we have these slots called Pitch and Partner, where you can have 15 minutes talking about dedicated to your company or your opportunity or ideas or that you may have to share with the rest of the group. So that's UK PLG with our involvement in IPLS. Thank you, Francesca. I'd like to hand you over to our first speaker.
Thank you. So let's our first speaker, Michael Margolis, speaking about US and giving us an update on merger and acquisition in the US. Let me introduce briefly Michael. Michael is a senior managing director, head of healthcare and head of healthcare life science investment banking at Oppenheimer. Michael has more than 25 years experience in life science sector with over 19 years of an investment banker. Prior to joining Oppenheimer, Michael served as a head of healthcare investment banking at Roth Capital Partners and as a managing director of a Merriman Charhan Ford Group. Before becoming an investment banker, Michael worked in the pharmaceutical industry with several roles at Novartis Pharmaceuticals, including as a director in the Global Business Development Licensing Group and at Eli Lilly as senior pharmaceutical representative. He's also served as a buy-side equity research analyst at Ursus Capital. So Mr. Margolis is a registered pharmacist and also an MBA in finance from New York University Stern School of Business and a pharmacy degree from Rutgers University College of Pharmacists. And with that, Michael, the floor is yours. Thank you.
Thank you so much. I appreciate the warm welcome. When I think about my career, some of the fondest years I spent at Novartis and Global BD&L, and there's not many people left, I guess, from that group. But Jean-Marc Sequier, if you're actually on the webinar, it's nice to see you're still at Novartis. And look, obviously, I've had a great career now as a banker now almost 20 years, and the markets that we're seeing now are pretty extraordinary, challenging, extraordinary. But hopefully they serve as there are opportunities for companies. And looking forward to hearing Howard's discussion on the China opportunity, because that's been a very dynamic development over the last couple of years. But I'm happy to go through some slides here and answer questions later. So just to give a bit of a background here on the macro issues impacting the market. I mean, clearly on a global basis, the world is in transition. Every day there's new headlines, there's new developments. And certainly they've creating a lot of uncertainty in the capital markets and the M&A market. So economic outlook, just to highlight a couple areas, certainly it's a little bit cloudy right now, to tell you the truth, just kind of given especially on the tariff and trade side, it's creating a lot of angst. There's been our fair share of global geopolitical tensions, both for Ukraine and Russia and certainly the Middle East. Other areas to talk about is really kind of the regulatory landscape. What's happening with the FDA? Certainly, it's an agency in the U.S. in transition, which I think is creating a lot of uncertainty and probably slowing things down, especially on the M&A side. And certainly other areas here that are impacting other parts of the world. Next slide. Let me drill down to more to biotech, because I think this is more relevant for our sector. I'll start with the positives. I'm not sure the public financing markets showing signs of life. That probably is probably I think it's probably a little bit too opportunistic, to be honest. I would tell you the private markets for companies raising private capital actually is quite robust. Although on the you look at it on the surface, you see some very large transactions. There is really a case of haves and have-nots. I think we're seeing a lot of great valuations right now. You have right now about 180 companies that are trading at or below cash. So from an investor standpoint, these are real opportunities here. The job of investors and certainly of pharma executives to really find the right opportunities. Everything is really cheap, but where can you find value? Certainly with the changes in the administration in January, a lot of discussion about decreased FTC oversight, which could be certainly a kind of a catalyst for more M&A, more activity. We really haven't seen that yet, although there is a silver lining there. We did see our first transaction greater than $5 billion with Intra-Cellular being acquired by J&J in January, because all of 2024 there wasn't a single transaction larger than $5 billion in value. On the negative side, interest rates really is I think to me is the biggest challenge here, and certainly with inflation being persistently high and the discussion around tariffs, reaching major headlines every day. Interest rates certainly are, I think, an impediment for a lot of activity in our sector. We haven't seen a whole lot of M&A activity, at least broad M&A activity. Most of it's been in the private space, aside from the one transaction that I mentioned. I think there has been a string of negative data out there for some pretty high-profile companies. So we all know that pharmaceutical drug development is a high attrition business, but it seems to me we've had a grouping of some bad data results most recently. As a result, the biotech equity market has been underperforming, and we'll talk about certainly the competition from China. This is something it's pretty extraordinary. Over $8 billion of deal value last year alone up front, and about 18 deals so far this year in 2025 coming out of China. And you're not talking about small companies, you're talking about large pharma companies like AstraZeneca and others making significant investments. And lastly, the FDA is in flux. New chairman was just confirmed in the last couple of days, McCary, and hopefully that'll provide a bit more stability, but uncertainty, which is creating significant volatility in the marketplace. So when I think about M&A, which is and strategic collaborations, there are a couple of themes that I think are important to talk about. One is dry powder. When I say dry powder, you look at kind of the large companies out there, the amount of capital available on companies' balance sheets is extraordinary. So there certainly is the balance sheet to be acquisitive, to be active. Patent expirations, we've been talking about this patent cliff for quite some time now. Depending upon what metric you use, what year you look at, within the next couple of years here, you're going to have probably 150 billion or more of revenue going off a patent cliff. Some of the biggest companies out there, like Regeneron and Sanofi and Merck and J&J, all have significant exposure. I think we're starting to see a lot of activity on the licensing side versus the M&A side, which is encouraging. Certainly, we'll talk about the Chinese market, but it's not just China. It's really across the board. And I would say, look, I think the biggest challenge here, this is an expensive business, and there is inflation within R&D in our sector, which is certainly from with the capital markets being challenging and being very discerning at a very minimum. It's a relatively high barrier to entry for companies to get in here. Lastly, kind of the cross-border licensing. China certainly will be a topic we're going to talk about in more detail with Howard's discussion here. But what you're seeing in China is really interesting. This was an investment that probably occurred about 5-10 years ago, and companies are able to create drugs faster and cheaper, especially get into humans much faster and cheaper. And as a result, we're seeing some significant deal values with these transactions. And the hope is that we're going to have a loosened regulatory landscape that will help the sector in time. But right now, just given all the uncertainty, it really has stagnated many areas. Next slide. So I would say in general here, we look at deal volumes remain above average, and they're right now kind of nearly matched 2023. but nothing kind of really beats 2023 from a deal value standpoint. If you actually strip out the Seagen transaction and you also strip out the Allergan and Celgene transactions in 2019, 23 was, from an M&A standpoint, probably one of the best years in over a decade here, both from a deal count standpoint, as you can see here, and also dollar volume. Unfortunately, 2025 has been slow. We've had about 5 deals so far year to date. Although I will tell you, we're approaching almost half of last year's value. So the market's not dead. I think people want to see a lot more activity. The hope would be that there's all these attractive opportunities, then you would actually see more volume. We all know Big Pharma doesn't buy things because things are cheap. They buy because there's value and there's a strategic fit. And I think that will probably take some time. I think until interest rates, at least there's a narrative around interest rates coming down, because cost of capital certainly is a topic of discussion for the biotech industry. Next slide. Top looking at 2024 here. I talked about in the prior slide. There was no transaction in 2024 of any deals over $5 billion, which I think really represented the strict regulatory FTC landscape. But there were some pretty attractive transactions that gotten done, both in the public and the private space. Next slide. Largest licensing deals in 2024 will certainly in both the neuroscience and the autoimmune I&I space here. You do see transactions in oncology as well, but certainly within licensing, there's a high degree of interest for both neuroscience and autoimmune. Next slide. In the first quarter of 25, I think there's been kind of a bit of a slowdown, certainly in transactions, especially M&A transactions, as you can see here. And you're certainly seeing a bit of a slowdown on some of the strategic collaborations. Although this week alone, Roche announced a very large deal with Zealand for an obesity asset, which this is actually after they acquired Carmot several years back for $2.7 billion. They just spent almost $1.7 billion up front for a phase 2 asset. It shows you from an obesity standpoint, metabolic standpoint, high degree of interest in this space. Next slide. I think the interest generally is on clinical stage private companies. This is an area for private companies, where I talked about there has been kind of an active private placement market, but it's really a very discerning, and it's a case of haves and have-nots. When you're a private company today, you really have 3 options. 1, stay private longer, and hopefully your investors are supportive and they'll give you more capital. 2, you get acquired, and certainly we've seen quite a bit of activity in that space. The majority of acquisitions this year alone have been for private companies. And lastly, if there is an opportunity, go public. Clearly, the IPO market is not open. There's been 4 companies year to date have gone public. The performance in the aftermarket has been poor, so most companies are choosing either to stay private longer or look for an acquisition. And most companies are running a dual process as they go, or even they're looking at all 3 options as they go through different options. Next slide here, you're seeing a similar theme observed for private companies in the licensing space here, but you are seeing activity certainly on both the public and the private side for strategic collaborations. Next slide. So when you think about some of these transactions, and I talked about the activity in the private markets, there are several investors that really, I would say, have benefited from some of the acquisitions since 2023. I'm sure most of these names here are familiar. The people on this webinar: RA Capital, Atlas, Forbion being a very active European group, and several others here. But you can see here, especially RA Capital, they really have benefited from some of these transactions on the private side. So the private biotech market, to me, for most companies, you think about an IPO. What is an IPO? It's a financing event, and you really got to make sure a company is ready to go public once they decide to go down there, because raising capital is generally it's probably the easier part. Once you're public, you got to operate as a public company. But as you can see here, some of these investors who have been very active in the private placement market throughout the last several years have been a real beneficiary of some of these transactions. Next slide. Average premiums are down significantly from 2023. I think that's certainly a reflection upon the market itself. Certainly there have been depressed values both in the public and the private space. On the private side, I think most of the companies investors are making money. In some cases, some investors, early stage investors, are making a lot more money than later stage investors, given the lack of a step up here. But premiums are down, especially across the 2024 public M&A takeouts. Next slide. I referenced this some of the previous slides. Pharma balance sheets are significant. There's about $200 billion of capital sitting on companies like J&J and Pfizer and Roche and Merck and Novartis, who have a lot of firepower to be acquisitive. Again, they're being very discerning here, but they are looking for opportunity, especially to deal with the upcoming patent cliff. Next slide. I mean, I'm not going to read for you some of the quotes here, but as you can see here on some recent quarterly and year-end calls, most of the kind of larger, well-known CEOs like from AbbVie and Amgen and Merck and Pfizer and Regeneron have talked about licensing and acquisitions being a key part of their strategy. We all know that big companies are externally focused. They're going to have to be externally focused to fill the revenue gap and also to add to their pipelines and address strategic needs going forward. The next slide. This is an interesting point here because at this point we have about 760 companies that are traded on an exchange. About a quarter of those companies, 181 companies, are trading at or below cash. So people say, well, you got $30 billion of locked up capital sitting on those balance sheets. Clearly 180 companies, all those companies here are not of high value. They're there for a reason, possibly a clinical setback. They have a financing overhang. But the question is, people are looking for capital. Some of the capital is sitting on those companies' balance sheets, and there should be probably some acquisitions and collaborations with those companies to address cash needs. Next slide. So lastly, before I pass the baton to Howard here, talk about China. Certainly, I've been doing this a long enough time, and I've really kind of watched drug development and drug discovery evolve in China. I think the Chinese pharmaceutical industry has done a fantastic job of really becoming a lot more innovative. I think historically there are essentially Me Too compounds. I would say they're Me Better compounds. And what you've seen here as a result, and this is 2025 alone, this list of transactions, 18 transactions, including 2 this week from AstraZeneca, or sorry, late last week. And these are significant investments by big pharma. It's AstraZeneca, it's AbbVie, and Roche, and others. And this doesn't even include some of the new co-formations that big funds like Atlas and Bain Capital and RTW, they're in Forbion as well. They're actually putting money together to out-license assets and form companies with really, I would say, experienced management teams. $8 billion of upfront capital last year alone really shows you how much capital is being deployed in the Chinese market. So what there's a term called from the DeepSeek moment. This was a Wall Street Journal journalist who talked about U.S. biotech is experiencing its own DeepSeek moment with the kind of the advancement in Chinese biotech. And this is if you're an investor in U.S. biotech, or if you're a U.S. government official, you look at some of the cuts that are being made and proposed at NIH, at HSS, at FDA. The U.S. biotech industry is a very special industry for America, and it's a real strategic. It has been a real strategic advantage. But China certainly has caught up very quickly. They don't have the same drug development capabilities that we have in the U.S., but you can find those capabilities. But their ability to actually discover compounds and their chemistry is fantastic. And that's why you've seen a lot of interest amongst large, medium, and small companies in making investments here. And drug development and drug discovery, you all know it's a high attrition business, but the cost to actually develop or discover some of these drugs and get into early human trials is a fraction of the U.S. cost, and that's becoming a real advantage for Chinese biotech. So with that, I'm gonna stop speaking. I think I've kind of said I hope to give you a pretty good sense of what I see the markets to be right now, both the capital markets as well as the M&A and licensing market. And I look forward to hearing Howard's thoughts on the Chinese opportunity.
Thank you very much, Michael. A very interesting and great overview on the deal making and deal situation in the US, and also how the US industry is looking at other markets outside the US in terms of discovery, chemistry, and drug discovery in general. So with that, let's introduce Howard Chen. Thank you very much for joining us. So Howard has more than 18 years leading healthcare strategy, consulting, and investment banking across China, US, and APAC region. As managing principal, head of IQVIA Consulting China, he spearheads innovative solution in R&D, commercial strategy, and digital transformation, empowering industry leaders to navigate dynamic markets and achieve sustainable growth. So, Michael, I'll turn it over to you. Thank you very much.
Thank you very much for the warm welcome, and thank you, Michael, for introducing what I'm going to talk about. So I hope I can continue on or take over from what Michael said, and kind of Michael presented kind of the buy side of things, right? The American markets where the players are kind of picking things up. I'll talk a little bit more about the sell side. So my overview is probably going to be a little bit different from Michael's. I'll start probably with a macro overview of the Chinese market, because what you see on the Limelight, Wall Street Journal, etc., is likely a lot of the deal making side. But I just kind of want to describe to you also how important the pharma market is to the global pharmaceutical industry. Many of the multinational players are upwards of 10 to 15% of their global revenues are coming from China now. And the last time I was speaking in January, speaking at JP Morgan, I remember a statistic was something like 30% of global deals, both M&A and licensing, are coming out of China now. So I'd like to give you an overview on just kind of where we're at with China, and also how we got here, and how did China become such a powerhouse now, actually second in terms of overall size of pharmaceutical sales market, and also second in overall development and licensing out market globally as well, right next to US. So let's start with the macroeconomic picture. So you must also have seen the news, CNN, BBC, etc., the sharp downturn that China's coming to. And yes, absolutely. I've been in China. I'm American born and raised, but I've been in China for 15 years now. I would like to say it's likely one of the toughest times we've seen in China. You see a lot of things, indicators pointing a very sluggish economy, including CPI on the top right-hand side, consumer confidence, etc., is kind of a historical low in the last 20 years. Foreign direct investment came down significantly from the exuberance in the 2020s. You also see kind of a significantly tapered off outlook by various different global kind of economic houses like IMF, etc. Gone are kind of the days of the double-digit growth, and now we're looking at somewhere around 4% growth in GDP, which is still significant for such a large economy, but moving forward, definitely a tapered growth. So what I like to say is it's kind of growing pains. It's at a stage where it's maturing, and aging population is kind of kicking in. It's definitely still 10 to 15 years behind Japan, but definitely one of the looming impact is the aging population. So the government's really tackling through a few things. It's definitely looking at transitioning the economy to a more consumer-based economy, just like what the US or many of the Western European countries faced, say, 40, 50 years ago. So all these changes combined with the aging population is really shifting the economic structure, and the government is really tackling this problem as well. So we foresee the sluggishness kind of will end in maybe 2 or 3 years, depending on how the geopolitics play out as well, like Michael was alluding to as well. Next page, please. Next page, please. Yep, there we go. So as I take you away from just the macroeconomic, let's look into the pharmaceutical market. So like I was talking about, China now is the second largest pharmaceutical sales market in the world, with a rather still stable growth of somewhere around 4%. Obviously, it's the second largest market, but comparatively on the right-hand side, you see it's still significantly behind US. So we're talking 1 digit behind the US, but again, significantly behind any of the other nations moving forward. So again, it's a very important market, not just to pick up assets, which I'll talk about, innovative development, but it's also a very, very important market for many of the multinational pharmacos who are deeply invested into China in the last 20, 30 years. The usual suspects, AstraZeneca, GSK, et cetera, are heavily involved. Many of them are investing not just sales, marketing, manufacturing, but also regional kind of R&D hubs now in China as well, which is attesting to what Michael was talking about. The capabilities around R&D and the fact that availability of patients, 1.5 billion population, and unmet needs makes clinical trials a lot easier and cheaper to do in China. I'll talk more about those points in the next few slides. Next page, please. So I'll put that into perspective, into numbers, pharmaceutical growth in the last few years as well. So back in the early 2000s to 2010s, it was somewhere around 9 to 10% growth every year, and it was a period where the national insurance programs is really reaching out to the whole population in terms of both coverage and in terms of kind of putting in more drugs into the national list. So a bit of that. So China is drastically different from the US, where the most of the healthcare bill is, or from its population, is footed by the government, called basic medical insurance. So imagine Medicare, but Medicare in a lot wider perspective. Everybody has Medicare in China. It's called basic medical insurance. It covers somewhere around 50 to 60% of total healthcare expenditure in China. So that's one of the key points here. The market is relatively funded by the government, and it's now trying to grow its second tier, which is the commercial insurance. So it's a little bit different from the US, where majority is kind of commercial, and a large minority is footed by the government. It's backwards in China. So with that background in mind, what you see is through the COVID years, it's taken a hit because of access to hospitals was down a bit. So you see that tapering off in 2021 to 2022, but then post-COVID, you see that kind of market picking up, and we're expecting somewhere around a 3 to 3.5% growth moving forward in the next 5 years in terms of overall pharmaceutical sales. Next page, please. So I'll zoom in a little bit more just to show you a picture. So a few key information here. COVID has really impacted China significantly in 2020, as is for the world. But after COVID, what you see is a lot of the pharmaceutical pickup that kind of staggered a little bit. So a few things in mind. The government is really controlling costs heavily. So again, I was alluding to this aging population. It's one of the key factors behind all of this. So the government is running into a situation where basic medical insurance, again, the insurance that covers all of the citizens and foots about 60% of all the total healthcare bill in China, it's as you move to aging population, what you see is Social Security collection is tapering off, while the silver hair age group is still picking up, and the healthcare needs are still picking up. So you got growth of expenditure while tapering off of income, which is similar to the Social Security situation that you face in the US as well. So with that in mind, the government is really turning on, we're pulling the levers to control cost. So out of COVID, you see a much staggered overall market mainly because of this cost control, and also kind of anti-corruption measures that the government is really going through. The whole Xi administration has been going through anti-corruption measures in the last 10 years, 5 to 10 years, and it's really putting its focus on healthcare, both in terms of it really wants to control costs. It really wants to squeeze out this corruption and put it into funding for medicine. Next page, please. So with that said, I hope I give you a ground or a lay of the ground of overall Chinese market, what it's looking at. So it's mainly funded by the government, and it's running into a staggered growth, a tapered, matured growth, if you will. And it's becoming one of the most important markets for both pharmaceutical sales, second largest market, and it's also becoming an innovative powerhouse in terms of outputting new assets, innovative assets into the market as well. Next page, please. So from this onwards, I'll kind of paint you a picture of some of the policies that will drive the market in the next few years. So I like to say it's in a balance or in a juxtaposition, if you will, because what's happening is the government has done a lot to spur the market towards innovation. So it has pushed forward a slew of policies and made a lot of friendlier investment environment built for pharmaceutical, homegrown pharmaceutical innovation, also friendlier environment for multinationals to do R&D here. So in order to foot the bill for higher cost drugs and innovative drugs, what's really happening in the market on the right-hand side is cost control, right? So aging population is kicking in. Government's really having a challenge, kind of continuing to fund by and large fund a single source funding for most of its healthcare costs. So it's really trying to build out a second tier commercial, but at the same time, it really needs to squeeze more costs out of this system so that it can put funding to the left-hand side, which is acceleration of innovation. So again, this balance is juxtaposition. It really wants to become a more innovative market, but at the same time, it needs to find funding sources to alleviate some of the funding issues so that it can put these funding back into the innovation engine, if you will. Next page, please. So I'll quickly drill down. So this page is talking about the overall policy. So China plans for its on a congressional level 5-year kind of industry planning, strategic planning. So under these 5-year congressional planning, what you can see is healthcare is front and center of all of this, right? So you see a slew of policy on the right hand side. You see encouragement of innovation, improvement of patient access, improving healthcare services, etc. On the bottom, initiatives that has put China in its place right now as a second largest innovative market. So what you see is joining of ICH, International Clinical Harmonization Society, thereby elevating China into kind of one of the second largest market, and it allows China to be leading in many of the multi-regional trials, multi-site trials. It also has done a lot to kind of learn from FDA, EMA, etc. in Europe to kind of develop its own FDA or NMPA, what is called, and kind of shorten the time frame for IND to NDA to the whole clinical trial process. And thereby these friendlier investment and friendlier kind of clinical trial pathways allowed for more capital to open up to China investment. So what really it did in the capital space is it opened up Hong Kong and the Shanghai stock exchanges for pre-revenue biotechs, and thereby welcomed them the VCs and the PEs for earlier stage funding as well. And then with the funding, obviously, a return of many R&D or influx of many R&D talent. So this, in the last 10 years or so, all of these activities, friendlier clinical trial environment, friendlier policies, freer capital markets, and also influx of personnel from overseas and homegrown personnel as well, kind of really built a really strong platform for R&D in the last 10 years or so. Next page, please. So what you see is these policies are really taking effect as well. So previously, I remember just 7-8 years ago, the overall gap between U.S. launches of an innovative product to a China launch is somewhere around 5 to 7 years. So I remember talking to many of these CEOs. IQVIA presents to many of these, and works with CEOs on a lot of the launch strategies, the M&A deals all the time. So when we're talking to the multinationals, they always tell us China is definitely second tier way back when. But now it's a completely different situation. Many of the launches are in sync. We see some even, Roche is one of the drugs Roche is launching is probably China first, then back to the US and Europe. So it's really changing the game as well. It's really, they know China's changing and one of the most important market, and there's still a lot of white space to be captured in terms of patient needs. So they're really advancing China to top tier market in terms of overall launches. Next page, please. So also on the local kind of homegrown innovation as well. So I remember, so IQVIA is also an CRO, a third-party kind of research firm. What we also do is we track the amount of business we get from both local and multinational. So back just 5-7 years ago, we remember very clearly most of our CRO business is coming from multinationals. And if you look on the left-hand side, just in 2023, that landscape has completely shifted. So again, because of the capital markets, the influx of capital, the influx of talent, and also kind of friendlier environment for development, what you see in the last 10 years is hundreds and hundreds of biotech firms have either been developed locally here in China or kind of co-developed with, say, Boston, London, whatever, and develop in both places. So a lot of new biotechs popped up in in the last 10 years or so in China. And what you see, very sharp contrast is just in the short 5 to 7 years time frame, that number of development has completely shifted, right? It used to be majority from multinationals. Now 60+%, up to 70% in 2040 is developing novel drugs are being developed by locally homegrown biotechs as opposed to just multinational or foreign biotechs. And on the right hand side, you can also see number of deals has grown significantly. So like I was mentioning earlier, it used to be a lot more licensing in deals, but now majority of what China's output is out licensing deals to the globe now. So again, JP Morgan, some of the figures I presented, 30% of global deals are now coming outsourced or sourced from China now in 2024. Next page, please. So with that said, like I was mentioning, that whole basic medical insurance running out of budget type of situation I was talking about. So one of the levers that the government pull is this national reimbursement drug list. So on an annual basis, for drugs to get into the basic medical insurance, the social insurance that the government has covered for the 1.5 billion people, you go through this drug bidding, right? So one of the levers the government pulls is this, right? In order for you to get in, you go through a bidding system, and then you negotiate prices with the government. So on an annual basis, it's a very big event towards the end of the year. The outcome is somewhere around 60% or 60+% of price cut from your commercial launch price to get into the national reimbursement drug list. And what the benefit of that is, once you get in, basically it opens up your market to majority of China, majority of the patients. So usually what happens is within a year of entering the national reimbursement drug list, your sales for that particular drug spikes up 100 to 200%, even upwards of 300% right from the get-go, right? So in the private market, you can usually only meet out-of-pocket costs and commercial insurance reach about 20% of the population. Through this basic medical insurance, national reimbursement drug list, you reach the rest of the 80%. So again, it's on an annual basis, it's a huge event for multinationals and local drug manufacturers to kind of do this market access scheme where they try to enter to market. And you see majority of the drugs that try to get into, and if you agree on the pricing, you get into the system, right? So it's somewhere around 70 to 80% entry rate for success rate for negotiations. Next page, please. So that's one of the levers, NRDL, National Reimbursement Drug List, for controlling the cost. The other lever is what is called volume-based procurement, VBP. Basically, it's a central procurement from many of the public hospitals. So again, majority of the drug sales are at hospitals in China. So you go to see the doctors and you leave with the drug, as opposed to the American or European model where you get prescription and you walk out to the retail space or the pharmacies to get drugs. So the major source of sales is still from the hospitals. And what you see is a cost control measure from the hospitals. It's a centralized bidding from the public hospital. So in many of the mature markets, Western European, American markets, there's a natural patent cliff. Your patent expires, and the generic players comes in and takes majority of the pie with a huge kind of fall off in pricing. In China, this didn't really happen. It's not that there's no patents. It's just that the multinationals have been here for 30, 40 years. They've educated the market so well. They were the ones to kind of bring the westernized system in educating the doctors, communicating with the doctors, so that many of the patients and doctors will come. So for drugs, the old drugs like Plavix of the world, it's off patent for 20, 30 years. They're still selling at a premium in China, and the government's really struggling with this, right? It's taking so much budget from the system because there's not a natural patent cliff where off patent drugs will tail off and fall off in pricing, but that is still garnering a premium within the basic medical insurance system. So they established this volume-based procurement program so that the generic players can be qualified and bid again for these pricing schemes to take over the pie. So in effect, basically, it's like a patent cliff in the last 5 to 7 years, but a hard hand away for the government to put in this artificially. So again, by putting that in, what's really happening on the market now is that the multinationals, again, like many of the mature markets, they have to focus on innovation. So previously, just 10 years ago, I would say 50, 60% of the revenues for many of the multinationals, your AstraZeneca, GSK, your BMS, etc., the revenues in China are from older off-patent drugs. That has completely shifted. Now they're mainly focused on innovative drugs because of this whole VBP volume-based procurement as well. Next page, please. And then I was mentioning cost control measures. So just like many of the other mature markets, Western Europe, especially the US, this whole DRG, diagnosis related group, which is a hospital-based control method. So it's basically saying, I'm going to group together a slew of services and drugs for one type of treatment. I'm going to set a flat price there. This is one of the movements that is a hot topic in China of late. This will be implemented. It's been implemented in 2023-24 onwards. It'll likely be centralized throughout the country by 2025 and 26. So again, another control measure for getting the hospitals to kind of manage the costs as well. So three levers the government pulling is to alleviate funding and putting that into the growth engine. One is the national reimbursement drug listing. The other one is the volume-based procurement, and the third is this DRG DIP, which is the right from the hospital sources, basically. Next page, please. So in effect, this is kind of a summary slide of all the policies. What you see is the green life cycle is what it was before 10 years ago. So where you kind of have a longer pickup period before national reimbursement drug listing. And then once you pick up your overall sales, you peak your sales, you don't really fall off for a while because there's no natural patent cliff, and there was very little local competition that can take your pie from you. So it was a really good situation for multinationals, and the multinationals really enjoyed this cash cow market in the last 20, 30 years. Now, because of volume-based procurement, because of NRDL, because of intense competition coming from the local biotechs and the local pharmacos, what you see is it's moving to the blue kind of life cycle, where it's very similar to many of the mature markets in that you have a very fast pickup rate once you get into the reimbursement drug list, and then you have competitors coming at your heels really fast. Once you're off patent, there's already competitors coming in, and then the volume-based procurement pushing that off. So it's forcing a lot of the multinationals to really get their acts together, run faster, but be more well coordinated, and also be more innovative, which means it has to search for growth, it has to search for more assets to place in place for their kind of off-patent loss in revenues, which brings me to the next section. Next page, please. This whole outbound and newco model. So I like to start with saying, so this whole outbound activity has started maybe 4 or 5 years ago. So you see a slew of Chinese biotechs trying to outsource the assets. So what you see is there's two tiers of players. The kind of larger local pharmacos are doing a lot of initiatives to kind of step out. So your Beijings of the world, et cetera, Henreis of the world, they're kind of developing their own kind of old model or doing their subsidiaries to try to become, a global or multinational pharmaco. That's part of the larger pharmacos, what they're doing. But most of the local biotechs, they'll likely still remain mainly in the Chinese market and out-license their global rights outwards or get completely gobbled up or bought up by a multinational, as Michael was alluding to earlier, to many of these deals that are happening. So licensing natural M&As are happening in the last 4 or 5 years now. But what's really happening on the ground, I like to kind of give you a picture of that, is also the exuberance in the last 5 years of the capital markets has kind of tailed off or died off a little bit because many of the Hong Kong listed biotechs hasn't been panning out, or that the evaluations are way too high, way out of whack before they go into IPO. And by the time they go to IPO, I remember the statistics saying something like 80% of them came down. The IPO prices kind of crashed through the floor, basically. Some of the second round funding from VCs weren't even making money. So the funding sources have tapered off. Many of the US dollar earlier stage funds has been a lot more stringent in investing. So one of the key things that they're doing is this whole newco model. So let's go to the next page. So what is this new co-model? I don't think it's anything new in the US or European market in that they've been doing this for a while, but this is kind of very, very new in the last year or so, in the last half a year or so, of a new model of licensing out. So what's happening is because of the geopolitical tensions, and maybe Michael was alluding to a little bit of this earlier, some of the rejections of some of the Chinese assets applying for FDA as well. So this whole rhetoric around kind of politics is also driving this. So both funding and also kind of this political tensions is driving a new model of out licensing, where the Chinese companies are out licensing their assets or completely being bought. These funds, mezzanine, I call them mezzanine funds, or fund VCs and PEs coming together and saying buying these global assets, um, uh, uh, global rights from these assets from these Chinese companies, and they're taking the assets and establishing a whole new company in the US or in Europe, and then hiring a completely new foreign or American, European-based management team to run this new co. So it's kind of a reset button in terms of funding sources, establishing a new co, and also kind of a reset button in terms of once you license that into an American company or European company, is it still a Chinese asset, right? So the whole model behind that is to bypass the whole kind of political rhetoric and also bypass the funding issues within China. So what happens in these cases, next page, please, is the local biotech originators own very little shares in the new co model in the new co. So they just take royalty basically, so that they can completely relinquish their global rights to this new co and to these funds. And then the new co in the US or Europe, they'll become a new biotech. They'll develop to a certain stage globally, and then they'll either sell it completely or become a biotech and potentially IPO. So we've seen 4 or 5 of these deals towards the end of last year and this year already, and this likely will be a pretty big trend moving forward in terms of the way that, Chinese assets go abroad, basically. Next page, please. So yeah, in a nutshell, so what we see is the Chinese market. So sorry, I know I gave you a lot of information there. So in conclusion, a kind of key takeaway. So China is becoming a very important market, not just for kind of pharmaceutical sales, but also for local innovation and the sources of innovation. So like what Michael was talking about, because of the fact that there's so many patients in China, a lot of white space, the time frame to do a clinical trial from discovery to POC, and the cost is significantly lower than the US and than the European market. So what I see, my personal conjecture is China likely will become a early development hub for Asia Pacific, if not for the world. So we see a lot of these models where early development is done in China and then kind of move out into an Australian trial or directly into the US to do an overall US trial. And then this whole new co-model, this whole licensing out model will also accelerate out of a lot of once these pathways kind of open up and these type of deals and these type of pathways are smoothened and the geopolitical tension, of course, is lifted some way, somehow. Likely what we see is a lot more Chinese assets coming out and a lot more biotechs and pharmaceuticals developing early stage assets in China and then going global after that due to market size, also due to ease of development and speed to development and how cheap it is to develop. So I'll leave you with that. Thank you very much for your time.
So sorry. Thank you, Howard. Very, very insightful presentation with a lot of information, as you mentioned.
Right.
Really, really great. Andrew, I see that there are questions in the chat. You wanna go
Yes,
over
Francesca. Thanks again to Michael and Howard. Very insightful. Yeah, we've had some questions coming in. If any of you do have questions and you haven't had a chance yet to pop them in the chat, please do, because we've got a few to get through beforehand. So, Michael, Howard, I'll just do sort of as they come. We've got a first one here from Rashid Hamza, Ben Hamza, and he's asking, how is R&D and biotech financed in China? Is the government investing, or is it mainly private or public? So how is
it's a combination. So I think 5 to 7 years ago, it's a lot of US dollar funds, so foreign fund sources pumped directly into the biotechs. In the last few years, I'd say a mix of not just Chinese government funds. We see Gulf regions funding significantly, Singaporean funds, sovereign wealth funds as well. So I would say it's a mixed answer where it's both funded by the government. Some governments, provincial governments have their own funds, central government has their own funds, and then private funding as well. So a mixture depending on the biotech, so a lot of funds are coming from the government as well.
Okay, interesting. Next one, which kind of covers both Michael and Howard, and this is the question regarding the supply chain, and this is from William Pay, and he would like to inquire about the additional fees that Chinese imports are having as they come into the US. I think there's a fee of up to 1.5 million per port when Chinese pharmaceuticals are arriving in the USA, and what sort of effect that's going to have.
I mean, I'm happy to answer, I'd say more generally.
Yeah.
I think in general, look, US drug manufacturing, whether it's fill finish or API, has been really dramatically reduced over the last couple of decades. You know, we used to have manufacturing in Puerto Rico because there were tax advantages. The U.S. government really has not invested in kind of bringing drug manufacturing onshore. There seems to be a goal of this administration to bring manufacturing back, bring jobs into the U.S.
Yeah,
So I think there may, if I don't think the public sector is going to lead with this. I think the private sector is going to have to figure out a way to bring manufacturing back. You know, Biosecure Act didn't pass. I'm not sure what will happen in the future. Obviously, you know, the concerns over WuXi and CDMOs. So you think about if drug manufacturing comes back to the U.S., it can't be more expensive than China or India. It just can't be. I mean, the industry is already kind of, I would say, being pressured so much on costs. We're trying to find efficiencies, not create more expenses. So I'm optimistic that we're going to see something. I don't think the government may latch on after the private sector jumps in. For example, we're hosting an event in Puerto Rico the next 2 weeks. For our participants, we're actually hosting a manufacturing tour of a CDMO as well as a fill finish facility. You know, Puerto Rico over the years has had a lot of challenges, especially with the weather, with humidity. So from a small molecule manufacturing, stability is a major issue. Hopefully with technological advances, you know, Puerto Rico can actually become, you know, an area for drug manufacturing in the U.S. again, and there'd be a kind of a low tax benefit to manufacturers and to investors. I think time will tell. There's a lot of talk about it, but certainly, well, I think at the end of the day, you got to find these cost efficiencies somehow.
Yeah. Okay. Howard, you got anything to add?
I think it's an interesting question. So because at least from my perspective, I don't see that many Chinese pharmacos really selling a lot of drugs that are manufactured in China and overseas to Europe. I do interact with many of the large pharmacos that are establishing themselves in the US. And I think many of them are trying to establish local supply chain, local manufacturing. So I'm not sure, even with the higher manufacturing costs in the US, does it make sense to manufacture in China and ship it over there, especially with these tariffs going on. So I'm not sure that would be a major problem to the industry per se, or affect how China is going to do business with the US, because I think if the China codes go over, they'll likely develop their own manufacturing chains and supply chain. That's my perspective from a personal view.
Well, you're right on Howard, especially on the newcos, right? Most of the newcos are domiciled outside the U.S. They're being funded by U.S. and European investors. The management teams are mostly, there could be some, I guess, some China nationals there, but mostly I would say U.S. and European management teams. So essentially, these are not Chinese companies. There could be Chinese assets or Chinese.
The whole play is to bypass, is to take that Chinese identity away, right? Because of the whole rhetoric around the political tensions, right? So one of the things is to bypass that issue. So, you know.
Thank you, gentlemen. Next question here from Francesca. Do you expect global Chinese companies to start shopping assets in other countries like the EU or US? I mean, only yesterday we had a call from a Chinese company looking to acquire a European platform.
Absolutely. So, okay, maybe I didn't put that into perspective. So, there's a lot more licensing deals now, but that doesn't mean there's no licensing in deals. There's tons, right? So 5-7 years ago, that was the main thing that was happening. Chinese companies that got a lot of funding, now they're buying up assets. So that's still happening. A lot of the events. So what's happening really is a lot of the large Chinese cos are fighting at the source. So U.S. biotechs, early stage biotechs, discovery platforms, et cetera, academia even, with the multinationals on acquiring a lot of the early stage assets to develop into from China. So I think one of the trends is also this, right? A lot of these global assets, once they get discovered, they might port into China with the cheaper kind of developmental platforms, and then start there, and then will they license back out to the multinational, possibly. So I do see a trend of that, definitely, yeah.
But Howard, I think from the IQVIA angle, I think from a discovery standpoint, early stage clinical development, China does a great job.
Yeah.
I think when you get into larger clinical trials, you're going to have a global development plan anyway.
Yes.
You can't just rely on China.
Completely agree with you. So many of the Chinese biotech, what they do is they start from China, and then they do their first multi-site in Australia, which is a lot cheaper. So they get some Caucasian data, and then they throw over to Europe and US to make it easier. So they start phase 3 in the US, Europe, as opposed to just starting from phase 2 or phase 1. So it just makes things cheaper as well. Yeah.
Thanks, gentlemen. Another question here from Jesus Bainer. Do you believe that China is going to be able to generate the next wave of innovative assets while there are constraints on local funding?
So it's a great question. So I talked about, and this question has come up before about the Chinese capital markets, right, for life science companies. And so far, we have not seen a development of the Chinese capital markets. While these assets are coming out of China and they're garnering big dollars. I mean, some of these deals have $200 million up front. Merck paid over $100 million for a preclinical obesity asset. But you're not seeing that being really reinvested in the capital markets. Companies are still looking to go public, for example, in the US. Because really, that is probably NASDAQ or NYSE is probably the best source for listing here. But that could change. I mean, my biggest concern, I will tell you, especially with all the changes in the US, was the FDA, HSS, grants being cut at NIH. You're going to kind of lose our competitive advantage here. I mean, just it's not even really being discussed, but the number of PhD programs that are being cut right now because of the grants at NIH being cut, at least just kind of like frozen, is considerable. So you can lose a whole generation of new PhD students. And that impacts innovation.
Yeah, absolutely. Yeah.
I'm in agreement, Michael. So comparatively, China is really investing heavily, doubling down on this, right? So we already see a lot of biotechs popping up, like they're attacking many of them, gene and cell therapy. I completely think a lot more of these very new assets will be coming out of China as well. Not just me too, me better, but truly FIC, BIC type of stuff coming out in that would be the next phase of China. But will that? I mean, obviously, U.S. has been on the throne for so long, the whole supply chain, the whole the commercial network, et cetera, and the market access programs, et cetera. It's really hard to replace that. So China is definitely still nascent there, but I would say a lot more percentage of assets will be coming out from China in the next few years.
Thank you, chaps. Now, one for you, Michael, here. How do you anticipate the shifting regulatory landscape under the second Trump administration will impact M&A in life sciences?
So I highlighted on my first slide some of the macro issues, some of the micro issues for biotech. If I had to basically highlight the two biggest issues right now impacting M&A and kind of, I would say, just the general biotech capital markets. One is inflation, right, which is obviously being created by, interest rates are still too high, and the whole tariff strategy, which is all over the place. So as long as interest rates remain high, I think we have a problem. Things are going to be slow, because at the end of the day, it boils down to cost of capital, including the pharma industry. Right? They borrow money. If rates are high, this becomes kind of a financial decision. The second is the FDA, and I think the uncertainty around the FDA is considerable. It's great to have McCarry, in the seat finally after 9 weeks since the new administration has taken over. My understanding, and people I speak to, not one PDUFA date has been missed so far. However, you are seeing a departure of the rank and file at the FDA right now. And McCarry's first job, and only job I would say right now in the first couple of weeks, is to make sure that the general rank and file don't leave. Because the truth is there are opportunities outside in the private sector. And what you saw today, HSS is going to eliminate 10,000 jobs. So if anybody, you have a lot of smart people and dedicated people who want to work for the FDA. but they don't want to deal with this nonsense. It's a real issue, right? So if, at the end of the day, people don't appreciate companies pay PDUFA fees. They pay for these filings and approvals. It's not like the taxpayers are paying for it, and that's not being. So I think what DOJ is doing, what the government's doing with all these cuts, they're indiscriminate, and that's very scary. And I don't think we've really kind of determined yet the full implications here. So I do believe, when you don't have an FDA that's functioning normally, if review times get extended, or you can't get key meetings with the FDA to get feedback on a pre-IND meeting or end of phase 2 meeting, that's going to impact things.
Michael, tell us for the non.
Go ahead. Sorry.
For the non-US delegates on this call, tell us a bit about Makary and their background and what effects they might have. So
look, what I know, and I don't know that much about him. Makary's at Johns Hopkins. I think he's a surgeon as well. He definitely is in favor of having a more efficient FDA, perhaps shortening the timelines for certain drug approvals, especially in certain areas. That is a very large medical need. But I think we're kind of yet to see what he's going to do. He's not a truly well-known person. Scott Gottlieb obviously was very well known when he was the FDA chairman. But again, I don't see a major issue with it. And again, what RFK Jr. does with HSS, I think he generally will probably focus more on the food supply, which is kind of his big issue. Although vaccines are definitely, but I'm not. For example, we're having a measles outbreak in the U.S. right now, and RFK basically said, make sure you check your MMR titers. So it's not that clear. And I think the general uncertainty is creating paralysis. And
hopefully, if that's interesting to understand, and hopefully that turns to opportunity in the next few years.
Look, what I'm worried about, and I'll tell you from a U.S. My father worked at Roche for almost 45 years, so I grew up in this industry. I don't know anything else really beyond healthcare and the pharmaceutical industry and life sciences. Although I dabble in economics sometimes. I worry about the U.S. because the biotech industry, the pharma industry, is a homegrown, important industry where we have a true competitive advantage. But if you basically if you don't invest in innovation, and you stop all these, even the basic PhD programs, and you cut this basic science at NIH, that's going to have an impact, both short term and long term. And it's going to allow, at the end of the day, China's made a lot of investments in the last 5-10 years. There are a lot of medicinal chemists who trained in the U.S. at prestigious universities and worked in the drug industry, got a lot of experience on how to discover and develop drugs, took some money back to China and built some real companies. And here we are 10 years later, and we're already seeing the fruits of that labor. The question is going to be, I will tell you. So, I don't see a major difference from, between a drug discovered in the U.S. versus a drug in China discovered, right? Especially the Me Too, Me Better opportunities. But from a drug development standpoint, you're going to have to expose yourself to global clinical trials. You can't just rely on clinical data in China. Patients are different. They're not heterogeneous like you see in the U.S., especially in oncology.
Yeah, that's something that I thought, looking at Howard's presentation about the costs of R&D and certainly clinical trials in China, the applicability to US and European patients and that gap and how does that get filled. Interesting. So thank you, Michael. A couple of other questions come in here. This one's from Tristan Nev. Do you see large global pharmaceutical companies emerging from China in a similar way that we've seen this happen with the automotive industry? Certainly in Europe, we've seen the likes of BYD and others beginning to take market share. Do you see a global, a significant sized Chinese company trying to enter?
I think we will see a handful of them, but do I think they will be they'll take the place of many of the multinationals now, the Mercks, the AstraZeneca. No. So there's gonna be a handful of players that will be big enough and
Yeah.
have enough clout globally to kind of become multinationals. But I don't think it's gonna be en masse, right? A lot of these local assets will likely still be out licensed to the multinationals because you can't beat this. I mean, Pfizer's been around for hundreds of years. It's hard to beat this whole network they've built globally, and it'll be an uphill battle. And honestly, with the political tensions, I don't think it's going to be easy as well, especially for the U.S. market. But yes, I believe a handful of them will become big multinationals, but probably not more than a handful.
Howard, any predictions on which firms do you see on the
So
ascendancy?
so Beijing is also already one of them.
Mhm.
Henrui likely will become a big one as well. Yeah.
Henry and Beijing. Thank you. All right. Let's see what else we've got here. This is from William Pay again. Do you see a possibility of China and Europe coming together to build a combined ecosystem to compete with US dominance? I think that's quite a provocative question.
I think it's already happening. I mean, Europe. I mean, for many industries, not just the pharma industry, we've been working a lot closely together. But I mean, I have to say, the global innovation hub for biotech is still the US. I mean, the US has the best funding sources in terms of commercial insurance. So many of the high price drugs, it's a lot easier to launch in the US first. So, I mean, yes, US and I mean, China and EU will work together, but without that US pie, it'll still, I mean, so I'm worried about this just like Michael, because most of the top innovation is still coming from the US simply because it's the whole system, right? It's able to foot the bill like this, right? Once you stop that, I mean, you're going to stop global innovation in pharma too. And I mean, China's going to pick up some of that slack, but without the US, is that engine is still going to, churn as fast, right? Are we going to, a lot of the good assets, especially in cell and gene therapy, that are more and more expensive to develop moving forward. I mean, if they put a pause on that, it's bad for the whole world, I think. So, yes, I mean, yes to that question. Definitely, U.S. and EU and China will work closely together, but I'm worried about if U.S. is not even part of this pie anymore, part of this picture anymore.
Well,
Michael?
the good news is that we've seen the global pharma players like Merck, like AbbVie, like AstraZeneca, like J&J. They're all active there, and they're investing more and more money in China. They have teams on the ground, and even the funds who are developing these newcos, whether it's the Bains, the RTWs, the General Atlantics, they're all there, right? They're all on the ground. So I think I'm not sure you're going to have the U.S. government support kind of U.S. efforts, but I think the industry itself is already going there. And the truth is, I think given the activity in the Chinese licensing market that we've seen, it certainly has impeded some M&A.
Yep, for sure.
Okay, another one for you, Howard, and this is, sorry to put you on the spot here, this is about sort of metrics in pharmaceuticals. You noticed, with these new government programs to reduce pricing and have, essentially tenders. What are the top 5 molecules in China? It was interesting to see that some of the patent expired products are still quite
yes.
well used.
I can't give that off the top of my head, but I would like to say out of the top 5, a couple of them are still kind of like the older molecules, so something like a chronic disease drug. But definitely the oncologicals, the immunologicals are picking up as well, right? So there's a drastic shift in the last 10 years. So a lot more novel products are kind of the top sales. But I would say we're still behind the US and EU in that there's still some older drugs in the top at least 10, 20 list still. Yeah.
And just on a sort of related question to that, when local Chinese players are picking up some of the generic opportunities that weren't previously there, have you done any benchmarking in pricing versus European generics or US generics?
Oh, yes. I'm trying to recall some of these figures. So, okay, post volume-based procurement, which is that central procurement cut I was talking about, they likely will be a lot lower than some of the Western European, and definitely lower than the US, right? But pre-volume-based procurement, I would say somewhere around the same as Western Europe. So what you see is that whole national reimbursement drug list, that whole mechanism is benchmarking global pricing, right? So once you go into that negotiation, the government will start at the lowest price they can find globally. So something like a Turkey or Korea, you know, or maybe even France or UK, they'll say, look, it's that price over there. You launched 2 years ago. I mean, 1.5 billion population. Why can't you go lower a little bit? You're going to gain a much larger market here, right? That's the base of the negotiation. So again, so back to in a nutshell, at launch, at an NRDL entry, National Reimbursement Drug List entry, it'll likely be slightly lower than many of the Western European are similar to that. Post VBP, definitely a lot lower than that. Yeah.
Thank you. One for Michael here. It's about future IPOs. Will the current uncertainties in the US environment influence the number of future IPOs in the biotech industry? So political uncertainty, what effect do you think it's going to have on US IPOs? I know you touched on it a bit in your slides.
I missed the last thing you said. I know obviously IPO uncertainty. Just repeat the question, please.
Yeah, will the current uncertainties in the US environment influence the number of future IPOs in the biotech industry?
Oh, the short answer is yes, and we're seeing that already. I mean, we've had 5 IPOs have included Ascentage this year, and I think many of the higher quality private companies don't see a reason to go public right now. You know, many of them already have strong investors who are willing to keep them private longer.
Yeah.
And then, you know, for them, like, why go public now? The environment's not there. You know, at the end of the day, in a high interest rate environment, and given all the uncertainty around the FDA, you don't see it right now. No.
Sure, gotcha. There's a multifactorial there. Incredible insight, Michael. Another question from William here, William Pay. To what degree did the US-led China bashing rhetoric actually help the returnees or Chinese talents moving away from the US back to China to sort of create more deep-seat moments for Chinese biotech? Interesting question, William.
So I think the biggest wave of influx of talent or returning of talent was maybe 7-8 years ago. So the early 2020s and the early 2010s, that was when the capital markets in Hong Kong and Shanghai was very exuberant, and hundreds and hundreds of biotechs were coming up, and these guys are coming back to take CEO, CMO type of roles, right? So that tapered off quite a bit as the Hong Kong market kind of tapered, and it was kind of an imbalance. So it's kind of where we'll pay more, right? It's all these PhD talents. They'll say, where can I start my business, or when am I going to get paid more? So I think it's an evening out now, but it's hard to say with the US kind of this whole situation with the Trump administration, whether or not, if China's innovation will continue to pick up and China resolves a lot of the economic problems, I still see a wave coming back in the next couple of years from, say, US, EU to China. Michael, any thoughts?
No, I agree with that. I think at the end of the day, if you can find a more cost-efficient, country or place to do business, and again, many of the chemists are from China, right? So them going back to China, it's not a huge leap, right? So I think we've seen that transition for a long time. Many of the Chinese nationals came to the US to study, they got PhDs, and they went to go work in the industry, they started young families, and they moved back. I think the challenge is going to be, I'll tell you, is like some of these programs, right? If there are limited PhD programs, like, for example, what I've seen on the biochemistry and chemistry side, this year alone, people will study elsewhere.
Of course. Yeah.
So I think that we have still 5 minutes left. So maybe just the last quick question, if any, or otherwise we go to the wrap up and the closing of this webinar.
Francesca, I think you had a question about US capital. Perhaps you could field that question yourself.
Yeah, It was for Michael. Actually, we see already that the flow of capital from US to Europe is not so large. Do you see the fact that China is improving in terms of having assets available, let's say, empty more and more Europe as well? So how do you see flow the capital out from Europe and basically to China?
Yeah, look, at the end of the day, and whether you're a pharmaceutical, you're a pharmaceutical executive working in BD&L or M&A, or you're an investor, right? You're looking for good quality assets, and you found really good quality assets in China more recently. And I'm a big fan of Europe. I mean, I go to the UK and I go to Europe on a regular basis. So there's good signs in the UK and Europe as well, and you are seeing opportunities get financed. Forbion, for example, and EQT have been really, and other funds in the UK have been really good, strong supporters of the science here. But it's challenging. But there are a lot of opportunities in China probably not getting funded either, right? We see these big transactions, but there are a lot of transactions that are not getting, or opportunities that are not getting funded.
Yeah.
So I think at the end of the day, people are looking for good opportunities. For me, I like the arbitrage. We all know that if you're looking for an asset, especially in Europe, it's generally going to be cheaper than the US.
Mm-hmm.
Generally.
Thank you.
Not always.
Okay, thank you very much again. Amazing Q&A session, really lively. I love it. I must say it was really, really great. So if you go to the next slide, Lambert, and then we close. So thank you again to Michael, to Howard. Really kudos. So really great. I just want to remind you all that the incoming Swiss HLG conference in Montreux, end of May, please register to also become our members. You see, we make really great webinar and conferences with top-notch speakers. So, and also join the pharma licensing group in UK, right, Andrew? So really,
thank you.
We have these international groups. UK, Switzerland is also, everything is in English. It's very international. Visit our website. The two the slides, the speakers agreed to share the slides with us. Thank you very much again.
Right.
And this will be available on our website, swisshlg.com. With that, with 2 minutes ahead, again, thank you very much, everybody. Thank you to our 2025 supporters. You see here a large group of pharma companies all over the world. We really appreciate your support, and thank you again, everybody. And with that, I look forward to hosting you in Montreux. So thank you, Howard. Thank you, Michael. Thank you, Andrew.
Francesca, just very quickly, huge